I want to give 7 pieces of advice for traders because I'm seeing a lot of people now starting to blow up their accounts. March, April, and May was easy, and now it's getting tougher. The ones that can really trade are really standing out. Number one, please write this down. What is your edge when you're actually investing in the market? Please write in the comments. What is your go-to strategy that if your life was on the line, that's how you're going to buy and sell? If you do not know that, it's going to be hard for you to win in this game. Number two, you must have one system that you follow through and through. So you can't trade RSI and moving averages and momentum and Fibonacci. You have to pick one system and ride with that and marry that. Number three, the biggest mistake I see a lot of you making is you are going against the predominant trend. You have to go with the predominant trend 90% of the time. So if tech is moving to the upside, even though we dipped today because we're waiting for Powell to speak, you still need to go with that trend 90% of the time. You guys are driving on the wrong side of the road and wondering why your account keeps getting into crashes. You have to cut that out. Number four, stop counter trend trading. Only 10% of your trades should be against that direction. Please put in chat. Only 10% of your trades should be counter trends. Number five, choose to trade the way of profitability opposed to the way that you want to trade. So when we did our last call on Saturday, kudos to my guy. I asked him, do you want to be profitable or do you want to trade your way? And he didn't say the profitable part, which told me he wanted to trade it his way. A lot of people get in their own damn way instead of listening and doing what is best for them and best for their family. Lock in on a system that works and only care about the P&L. Number six, swing trading will give you bigger profits. So you should swing twice per month. These swing trades should last anywhere from 5 to 15 days. You have to have the money working for you instead of you working for it. And number seven, your only baseline of achievement that matters is your profitability. Nothing else matters. I don't give a damn how much you know. If you're not making money and bringing it home for your family, everything else is conjecture. And a bonus lesson, 2.5%. And I know people are getting crazy gains. So you're seeing people getting 400%, 300%. That's not normal. If you stack up 2.5% over 27 days, that's 67.5%. Put yes in chat if you like those gains. But if not, enjoy overtrading and messing up your account. The 3 biggest lessons that I learned from Paul Tudor Jones, which is considered the Michael Jordan of the futures market. And these rules are very simple, but simplicity is often hard to apply. Number one, the most important rule is defense first. I don't care if you can make $2 million in the market. Some of you made 800,000 last year in the market and gave away 790 of it. Once you hit your target, walk away from the market and know what your goal is. Number two, do not average down your losers. So if you got in a GameStop and you're mad at me because I told you it was trash, it doesn't make sense to buy another 1,000 shares because you're going to prove me wrong. You have nothing to prove. If you have bad players, bad investments on your team, you have to cut them because those are a cancer to your account. And number three, you have to look for huge opportunities with huge risk to reward scenarios. March, April, we had that. When Caesar and Envy come on, they'll tell you about the same thing. You want to look in areas in which there's unlimited upside. If you have limited upside, like if the market, the top is at 100, you don't want to buy at $93. You have limited room for upside potential. Lesson number four, if my positions are working, I keep it. If it isn't, I cut it. Please write this down. So last year, when everyone's hurts crazy, same thing. If your positions are losing, cut them. If they're winning, keep adding to your winners. Next week, we'll talk about averaging up. So when you have a winning player like Apple, Microsoft, NVIDIA, AMD, Franklin Dynatech, all that we called on the show, Striker, CrowdStrike, you want to keep adding to those. Like you want to pay Jordan, Iverson, Kyrie more than you would a player that's the 200th best player in the league. And number five, the best money is made at market terms. So when a market is at an absolute bottom, you have to begin practicing catching the bottom of the market. And then when we get super oversold, we need to start shorting at the top of it when there is a clear bearish signal. I came across a book a couple weeks ago, a book that was written in 1688 on investing. And I thought this was really damn fascinating because the 4 pieces of advice that was prominent in this book still apply today. Number one, never advise anyone to buy or sell shares or never listen to any advice when someone's talking about stock picking. That includes us. That's why we say do your research. I hope that we've built enough trust over the years, but I still want you to go do your own homework. Number two, accept your profits and your regrets. So when you're speculating or investing into the market, you're going to lose money and you need to be prepared, but you need to know what your maximum downside is going to be and what the upside is going to be and make your calculation on if that company is good for you to invest in based off that. Number 3, sometimes profit is very high and unfortunately, sometimes it is very low. You have to be prepared to deal with that financially and emotionally. And number 4, please write this down. He who wishes to become rich must have money and must have patience. I know everyone wants to take a penny and turn it to $9 million. That's not always the case.
You can't do that?
With Forex, you can. With just one penny and MT4, I can then become a millionaire in 2 days.
Magic shall appear.
You know, so it happens.
There goes my retirement plan.
Hey, there are 16 meme stocks with at least 100% gains in 2021. I want you to screenshot these and your homework for the week. Tell me which one of these are still profitable today, and I'll be happy to answer that for you next week. The 3 ways to measure your trading performance. As Jay said, men lie, women lie, numbers don't. Number 1, Sortino Index. So before selecting an investment vehicle, you have to understand what the adjusted return is, not just a simple return. So if I can make you 100% return, but at one point you're down 99%, it's not worth it. Sortino tells you that. Number 2, the Ulster Index. The greater the value of the Ulster Index, the longer it takes for a stock to get back to its former high. So if you see a company made a high in 2017 and it's taken forever in 2020 and 2021, the Ulster Index is going to be higher there. And number 3, my favorite, profit factor. For every dollar that you put into the market, how many are you getting back? A simple formula is you want to put in $1 and get 5, $1 and get 10, $1 to get 50, and $1 to get 100. But the profit factor is all I need to know. If your profit factor is underneath 1, you're not doing good. If it's at 5 or better, you are crushing the market. I know we don't talk a lot about dividends, but these are 3 companies you can use to receive dividends every month. So if you stack Apple, Nike, and McDonald's, even though the dividend is small, in January, you'll receive something in Nike, February in Apple, March, McDonald's, and it will continue to rotate. So every month, you'll end up getting some dividend out of the market as well. Next week, I'm going to have on my sister Kayla to talk about Cardano and crypto. I'm not the crypto expert, but she's been invested in the market, so I'm happy for you guys to learn something from her that she's never talked about publicly before. And on to Tesla, everybody's favorite stock, even though they drug the market down today. 648 million of the shares are owned by institutions. Elon owns 227 million. Man, that boy is rich.
Different level.
Short interest is 52.3 million. So for everyone on Reddit still, we can see what the short interest is. Retail investors, 24 million, and insiders are at 8 million shares. Here's the crazy thing, though. Talk about hedge of the year. Elon probably is the most vilified entrepreneur since Steve Jobs. So to hedge, he invested in Bitcoin. The crazy part, Tesla's made $721 million from selling the actual product, the car. They're up almost $1 billion
in Bitcoin.
It's at 930 million.
2 weeks.
Talk about a hell of a hedge to get enough runway to then in 4 years be dominant as hell.
2 weeks.
Well played.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.